Good evening and welcome to the Strategy of the Week tutorial for April 12th, 2013. My name is Steve Chappell, the Director of Educational Services here at VectorVest. The title of our presentation tonight is the efficiency factor, using the tote board to find consistent winners. One common theme among many investors that I talk to at seminars and trade shows and other places is that they seem puzzled at the idea of deciding on what search to pick for the current market condition. Well, several years ago in 2009, we designed a tool called the VectorVest Derby, which is aimed at providing that solution. To further delve into this topic, let's jump right in the program. Here we are at the home page for VectorVest 7 Canada. The first subject that one must consider when deciding on which search to use to find the appropriate stock selection for the current market condition is to analyze that market condition and decide whether the market is currently bullish or bearish. Well, it should be no mystery that we had a big down today again in the Canadian market. If we look at our color guard, the color guard is neutral after today's trading, and we see a whole wall of yellow on the color guard. However, we have been in a confirmed down situation now since April the 2nd. But to further explore this subject, we ought to take a look at the most important graph in the platform, and that's your market timing graph. To do so, I'll go right up to the top, click on the Graphs tab. From here, I'll come over to the left and change it from stock to market timing. And let's just zoom in to the last 3 months. And of course, the Canadian market had a nice little run, which culminated with this high here on March the 12th. And has been headed lower ever since. We can see that we did have a sharp upward 3 days in the market this week, followed by 2 big sell-off days. So it appears that the big money is still selling the rallies. We'll also notice that our market timing indicator has begun to work its way lower below 1, indicating that the long-term trend of the market is strengthening to the downside. With the buy-sell ratio also treading lower, there are fewer and fewer buy recommendations remaining in the Canadian database. And with the RT headed lower as well, the short-term trend is beginning to pick up steam to boot. So with all that information in play, it still makes sense to focus on bearish strategies, strategies that make money when the market is falling. Once we've determined that, the next logical thing to do is to take a look at what we call Unisearch. To do that, I go right up to the top, click on the Unisearch tab, and that will leave us with a large directory of yellow folders on the left-hand side. In each of those folders are searches. It could be as simple as scrolling down to searches short and picking from any of the short searches that are in this folder. But that leaves us with a lot of choices to make even so. And so the best solution, if you're fortunate enough to own the VectorVest Derby, is to go there and get the insight you really need on which of these searches is doing the best. So with that information in tow, let's go right up to the top, click on the Derby tab, and we won't explain the whole tool this week as Todd Schaefer, the manager of research here at VectorVest, did a wonderful job of explaining how the VectorVest Derby tool works. This week we'll focus exclusively on the tote board. To get there, I'm going to slide right over to the tote board button, and we'll push the summary off to the side. By default, the tote is going to present us with a long table of searches, which are sorted by total gain loss. So we can see, as of the last 5 trading days, aggressive small fry comes in pole position because it has the largest gain. Since we have 3 strategies coming in with the same gain, we'll scroll out to the right, and we'll notice that the tiebreaker came down to efficiency factor. And more on that in just a bit. Let's scroll all the way back to the left and quickly recover all the different information that's contained in the Derby Tote Board first. So of course we'll tell you whether it's a long or short strategy, for the percent winners today, looks like 40% of the stocks in this basket are making money. Looks like we have a 0.39% gain today. 100% winning days over the last 5 trading days, and 64% winning trades over that same 5-day period. It's important to remember that these are cumulative results in that it opens and closes a basket of stocks each and every trading day. That resulted in a 5.17% gain, an average daily gain of 1.03, and a max drawdown of 0 in this particular instance, which is phenomenal. When I start thinking about best applications, one of the practices that I tend to follow is to run the tote board from a designated date in the past to the date where I currently am to get a feel for the strategy that's performed the best over that segment in time. For example, if I'm focusing on bearish strategies, it makes sense to focus on the peak to the current date, or from the last major market call to the current date. If I were looking for bullish strategies, it'd be just the opposite, from a market bottom to the current date or a market signal to the current date. In this case, I decided to use the RT Kicker combo as it's the latest, greatest market timing mechanism that we have. And so to quickly revisit that and to get our time frame to set up the tote board correctly, let's go back to the market timing graph. To get there, I'll go right up to the Graphs tab at the top. And you guessed it, on the market timing graph, we'll come down to the bottom and add the RT Kicker combo timing dates. The first RT Kicker combo timing date came in on February 4th of this year. And so I can simply set up the tote board from February the 4th to current to see what strategy does the best making money day in and day out. Let's go back to the Derby. At the Derby and in the tote board, I can then change the calendar. So I'll simply click right on the box with the dates. I'll take my start date back to February 4. And I did this yesterday, so we'll run it all the way up through April 11th. I'll click on OK at the bottom. We'll slide back over to the left. And that is going to give us a short list of strategies or searches that have performed the best since the market began to tip over and we started getting bearish signals on the market. So from February 4th to April 11th, Marathon Short comes in pole position at the very top. It's a short strategy which is congruent with the current market condition. It had 68% winning days, 60% winning trades, and this is over the 47 different baskets of stocks, with a max drawdown of 6.75, which gives it a nice high efficiency factor of 38.01. The name of the game is efficiency, so I'm going to encourage you to sort by efficiency when analyzing these strategies. And to do that, I'll just simply click it twice, and it'll put the highest, most efficient strategies right at your fingertips. That changed Marathon to second position and put Cito's hook and sinkers at the top. It has the same number of winning days, a little bit fewer winning trades. Now the total gain loss is only 3.5%. So this is where I stopped and said, wait a second. You know, I like the fact that it's winning majority of the time, but I don't like the total gain that we have over that period. I would immediately skip back down to Marathon and say this looks like the better solution. Look at the performance from a total gain perspective. Marathon's up that 29.31%, and it's bringing back a little over 0.6% on a daily basis. So I'm willing to live with a little bit larger of a drawdown, nothing out of control, but certainly willing to give up some of that risk there for more potential reward. And then you'd want to take a look at the next couple of performers just to make sure that you're not over optimizing your search selection. So with Linda's Losers, it does actually a very nice job as well, coming in at 16.59% over that period, with the same number of winning days and the same number of percent winning trades. But again, the daily performance is about half that of Marathon Short. So Marathon Short is the one to focus on. What you would do now is take that knowledge over into Backtester and begin to put stops on there and put these positions into a more realistic portfolio setting to ensure that this strategy still looks good. So I'd simply go right up to the top and click on Backtester. And from here I'd click on Backtest an idea. We're going to leave all the account settings set to the default selections. In market timing, I'm going to uncheck use market timing, and this is great because anybody that has VectorVest can follow along. In automation rules, the first setting is to sell short. Next, we need to go find that search, and that was marathon short. The easiest way is to sort alphabetically and simply scroll down the list. Now for the initial run, I usually do what I refer to as a baseline run. And we're not going to use any money management other than get it in there with commissions and just the normal stuff. However, even though I'm not setting stop criteria, I am going to go to the More Settings tab and apply some common sense at the very bottom. I am going to limit repurchases to 31 days. This avoids, of course, the wash sale rule, which applies to short positions as well as longs. At the very bottom, we'll change the percentage of average volume to no more than 2. And if you want to dial that down to 0.5% even, feel free to do that. The next thing is to select the period, and remember that was from February 4th of 2013. And we'll run it up to the most recent close of Thursday. I'll click on the name description, and we'll just call this Marathon Short. Baseline. I'll click on Finish and Run. Alright, hey, everything looks pretty good so far. We're off to a good start. On this run from 2.4 to 4.11, with no money management, just commissions and some simple rules, this portfolio is up 22.86%. The first thing that I like to modify on this baseline typically is the number of positions that I hold. And so to do that, it's very simple. I can right click on this baseline and click Copy. We'll make no adjustment to account settings, no adjustment to market timing. We'll go right to automation rules, and when we adjust something, we want to do it scientifically and only adjust one variable at a time. So we'll keep the marathon short search. I'll go to the More Settings tab and we'll drop it to 5 positions. I'll go to the bottom and click Finish and Run. And let's see if we do any better. Well, look at that. Went from 22.86 to 26.51. Sure did. Also, we cut our commissions in half because we're buying half as many stock. And our drawdown went down significantly from nearly 8% to just over 5%. So from here, let's suppose we're greedy and we'll focus on 5 stock baskets. So before I go to the next test, I'm simply going to click Edit here, go to my name description, and I'm going to type in 5 stocks. That way, I know how many positions I was working with and the change that I made to the baseline. So we'll simply click Finish. From here, I'll right click again and go to Copy. I'm not going to make any adjustments, just one variable at a time. And in this case, let's start playing with stop criteria. It's one of the most important decisions. Certainly everyone should trade with stops, and so we'll go to the second tab here that says Stop Criteria. And in here there's 5 or 6 that I usually like to experiment with that tend to work well. So we'll key in on those as to not belabor the point of what you want to really do is get in here and do enough of this homework to where you feel comfortable with your end product. The first one that we'll do is we'll start with a trailing stop. And in this case, we'll just go with the default 10%. And now when I make this modification, I'll go right down to name description, and we'll add TS equals 10%. We'll finish and run. This will create yet another test. You can see the equity curve is doing quite well. And it comes out right in the middle at 24.22%. Now the nice thing here is we have stops in play. And that'll be important should things go awry in the future. Our commissions went up greatly though to $288, while our drawdown remained tempered at 5.3. So we're off to a good start, but let's see if we can do better. I'll right click, go to copy. We'll change it from a 10% trail. Let's try a 15. We'll change our name description, and in this case it'll be 15%. Finish and run. Hey, that's more like it. Our percent gain loss went up to 30 overall. Our commissions went down, were cut in half. Our annualized rate went up to 168, and our drawdown is right back to where we started at 5.08%. That looks wonderful. But let's experiment with a couple other stops just to make sure that we are on the right track. You can right click, go to copy, we'll click on automation rules, stop criteria, and let's try average true range. So it says here trailing average true range stop. We'll look at 14 periods with a multiplier of 2. And it'll give us a nice description of the application up here. It says this stop criteria will be met if the stock's price increases by the multiplied average true range amount from the lowest price the stock has reached since the trailing ATR stop was implemented. So it looks at the range of each bar over that 14-day period. And in this case, it'll multiply that range. Let's say it was $1 by 2. And it would set the stop there and trail up with the upward direction of price if we were long, or trail down above the actual price movement if we're short, as we are in this case. I'll click on name and description. We'll just change this to 2ATR and finish and run. Well, interesting. Not quite as good as what we saw before, but has some merit. 90% winners, 26.5% gain comes in towards the top of the returns. Commissions are reasonable, not quite as good as what we had before. So I'd still stick with the trailing stop of 15% at this point. Let's try just one more variation on a percent gain loss. So I'll right click, go to copy, automation rules, stop criteria, and we'll choose percent gain or loss. Let's try a 2010. So we'll take profit on a 20% gain from the purchase price or a loss of 10% from the purchase price. And in this case, since we're short, I should say entry price. We'll click on name and description, change it to 2010, finish and run. Whoa, we got right back up there again. 30.1% here, 166 annualized. Commissions went up just a bit. So the tiebreaker for me would be looking at the commissions and also focusing on that max drawdown. The max drawdown is really the key, and that's the highest peak in the equity curve to the lowest valley before the equity curve takes that peak out again. Very important. I consider that looking at sort of the maximum pain that one would have withstood over that test time frame. And 5% is certainly reasonable. Although true, this is a very short-term test. And so it really doesn't have to be any more difficult than that. First step is to recognize what direction the market is moving and what the overall guidance is. And since we're in a confirmed down and all the indicators are treading lower and a big market down day today, certainly we got to be playing in a bearish direction. From there, we simply go to the Derby and to the Tote Board, modify the dates to the prior peak or even an early call when the market reversed, and run it all the way up to where you are today. Sort by efficiency, and then simply peruse through the numbers. You want to go with the best combination of high efficiency and high total gain, cumulative total gain. From there, you plug it into Backtester, and you work on stops, you work on money management tactics, and you get your answer. And in this case, Marathon with a trailing stop of 15% certainly looks to be a good solution for the current market we're in right now. Thanks for tuning in, and we'll see you again next week at VectorVest University.